Hey everybody. So I wanted to do a really quick breakdown on today's price action. It is April 14th, 2025, and it is a Monday. You can see right here I have the Forex Factory news announcements throughout the week, the 14th through the 18th. And you can see right here on Monday, it is a no news Monday. I consider this no news just because there's no red folder news, and this is just a orange folder in the PM, and it's a FOMC member speaking, so nothing really too crazy right there. Um, and so yeah, I'm considering that a no news Monday. Now, typically on no news Mondays, what I'm doing and what my protocol is I'm only trading if there's an A plus setup present, and if there is, I'm de-risking on it. So whatever my normal risk is on a normal day, I'm gonna risk lower than that during a no news Monday, just because it's the beginning of the week. There's not a lot of volatility expected. Today, however, was a lot different, and I posted it on my Instagram as to why I was expecting more volatility than what a normal no news Monday would offer. So if you want to like get updated on random things like that or just check out more trading content, you can follow my Instagram. I'll put the handle in the middle of the screen right here right now. But the reason why and what I want to cover here is, within the trade breakdown is how you can anticipate when to expect better conditions versus not as good conditions, especially on a no news Monday, because I feel like a lot of beginner traders, one of the and even like intermediate or people who have been trading for a little while, is one of the biggest questions is how do I know when to anticipate tough price action versus easier price action. That was always one of my biggest questions, as I was going through my journey. Um, and I wanted to cover that here a little bit today. So there were two reasons as to why I wanted to see or why I expected better price action today versus what a normal no news Monday would offer. The first is if we take a look at the weekly calendar right here, you notice that there's nothing on Friday. That's because Friday is considered a holiday um, in the United States. I know some people who watch these videos are not from the United States, but Monday is Easter, which is a holiday, and so Friday is considered Good Friday, and the markets are closed then. So whenever we have a shortened week like this, that's at the end of the week, I'm not treating Monday as a normal Monday. I'm treating it as like a Tuesday. And Tuesdays, I'm more willing to trade if there's no news compared to a Monday. So that was one reason why I expected better price action today. It wasn't the main reason. It was honestly just like a little addition there, just a little plus. The main reason why, and I'll get this out of the way, of why I was expecting better price action is I want you to take a look at the previous days right here, more specifically the previous 3 days. So Wednesday right here had a huge move up, one of the craziest days that I've seen in my trading career. 2,600 handles, about a 16% gain. Following this day right here, this was last week, Thursday, did we take out the previous day high or the previous day low? So did Thursday take out the previous day low or high of Wednesday? No, right? It stayed below this low, stayed below that low, or excuse me, that high, and it stayed above this low right here. So this is what's considered an inside day. And so anytime there's an inside day, I'm expecting the day after that or the following day to have better price action in a more um, explosive move. Now, if we take a look at the following day of Thursday, so Friday right here, did we take out the previous day high or the previous day low? No. We stayed inside of that range too. So now we have two consecutive inside days right there. And the way that I see that in a really good comparison is if you think of like a spring before it jumps, I guess in, you know, simple terms, is you have to wind it up or crunch it down to the point where it's gaining all of that that energy right there in order to be released, right? And have a lot of explosion and a fast move higher. That's the way that I see inside days. Is it's just a lot of pent up energy that's waiting to be expressed, right? It's a lot of pent up aggression, I guess you could call it in price, and it's price accumulating and creating a lot of liquidity on both sides of the markets. And so that is why I was expecting price going into the day on Monday, despite being a no news Monday, for there to be better price action and some more explosive and quick moves. Now you can see that it wasn't a huge day, right? But you see from Friday to Monday, we had a really big gap up. So that already right there told me and gave me that confirmation that, yeah, this is already showing characteristics of that um, explosiveness that I'm looking for to occur. And so that was my idea going into the day on Monday. There wasn't any really daily PE arrays that I was looking at here for price to reject off of. A lot of my analysis came from the hourly and below today. So we can just take it down there. And I really want to walk through from when I opened the charts up until I took a trade. So the first thing we need to do, and what I always do, is what did overnight do? And where are my draws on liquidity? The first things first is if we take a look, these highs right here are very smooth, and it's the previous week high, which is a super important point of liquidity. Some more important points of liquidity: previous week high, previous week low, previous day high and low, session liquidity, intermediate term highs and lows, which I'll go over here in a minute. Um, and yeah, that pretty much covers it right there. But we're talking more about liquidity and highs and lows here. So those are the main points of liquidity that I typically look for. Now, previous week high right here, and we also had this weekly opening price liquidity. And I want to go over that here in just a second. But if we take a look at what overnight did, this is 4 p.m. on the hourly chart right here. So price closed on this 4 p.m. candle on Friday. And then on Sunday, we had a gap up. So we gapped up all the way right here, created this high, and traded lower. Did we fill the new week opening gap? Obviously, no. We left an unfilled area of price, meaning there's no trading that was done in this area right here. And this is what's called a liquidity void. So anytime there's a liquidity void, especially with new week opening gaps or new day opening gaps, those are going to be probably my primary draw on liquidity for that day. And that's exactly what it was for today. Is I when I as soon as I opened the charts and saw this, I knew exactly where my draw on liquidity was going to be. It was just a matter of what do we need to take first before getting there. So let's talk about that. What are obvious points of liquidity for us to take first before going to this level right here? And obviously, if I want price to go lower, I need to see a manipulation higher first. That's always that's in every single trade that I take, every single um, point within my narrative and building a bias and things like that is I need to see manipulation first before I see expansion towards my target. So this is my target right here for the day. And this is a really good way, kind of like a side note right here, how you can hold yourself accountable and remain disciplined is once you have a obvious and clear draw on liquidity that you want to take, meaning I found this draw on liquidity that's lower than what price is at right now, so obviously my bias is bearish. Tell yourself in your journal, pre-market, I'm only going to look for trades to this level. That's kind of going to help you confirm and give you that little bit of, um, self accountability that you're going to follow your plan and not get tricked if price is going to just take off without you. You're holding yourself accountable and remaining disciplined to an obvious draw on liquidity, and you're only willing to take trades towards that because even if you lose, you can live with yourself, right? How mad are you going to be at yourself if you have this obvious draw on liquidity, but you're like a dog chasing a bone, right? You see something that looks good the other way, so you take that, you get stopped out, and it goes towards your actual draw on liquidity that you already had in the first place that you wanted to see, right? That sucks. That's super annoying, and that can lead to really bad habits like revenge trading, um, and tilting and over leveraging and all that good stuff. So just a little sidebar right there. Good way to hold yourself accountable. But back to the analysis right here is what areas can I look for price to then draw to this liquidity void right here. I want to bring your attention to this high right here. And this is not just a normal high. This is not just any high right here. This is the weekly opening price liquidity. And so the reason why this is important to me is you can go back into prior price action and see normally whenever price opens up at 6 p.m. on a given day, whether it's Sunday opening for the week or just a normal day opening, this high is usually getting hit like 9 out of 10 times during Asia session, and if not Asia session, then London session. And so that's when you would use, Asia or London highs or lows as your draw on liquidity. But this was left intact right here. So to me, this is a really, really strong draw on liquidity and also an area where I could potentially see price reverse. Now, initially, what I wanted to see was price manipulate all the way up higher to take this previous week high and these equal highs right here to then go lower. Now, if you take a look though, it was about 200 handles away from where price was, but I didn't want to count it out just because of how volatile the market has been. And I would have felt even more comfortable shorting if there weren't these equal highs right here. But price didn't need to go all the way up there because it's so far away. This is an obvious draw on liquidity, and this is just too good to not target, right? So if this high was to get taken, I could look for potential moves lower, and that's what ended up happening. So if we go down to the 15-minute time frame here, we can start to kind of get some more detail here. And I want to take a look at this price action right here. And if you take a look from the opening price and overnight, I'm always asking myself, what did Asia or what did London do? Did it manipulate? Did it distribute? Did it accumulate? What did it do? Because that's going to help me frame a bias for, are we going to have a New York reversal or a New York continuation? It's really simple. Those are the only two things that can happen, or just straight up consolidation, right? So if we take a look at our session liquidity, highs and lows created during Asia and London. This is Asia low right here. Asia low, where is this resting? Right above this liquidity void. So that acts as like rocket fuel for price to want to draw down towards this level because we have session liquidity resting above this liquidity void. London high and low wasn't really of interest to me today because you can see London low was taken right here. London high was already taken. So it's gonna be different every single day. That's why trading is discretionary and it can't just be, you know, straight to the point because you're going to have to adapt to things like this and it's going to be different every single day, right? There's patterns that present themselves, but at different times and in different ways. So for this day, Asia low was of interest to me because it was resting right above this liquidity void. Now all I had to do was wait to see a manipulation above this weekly price right here, this weekly opening price. And another thing that I liked, before we get too far ahead of ourselves right here, is not only am I asking myself about liquidity and where price is drawing to, and I'm also thinking about session profiles. The main thing that I'm looking for during the opening range and what is really happening every single day is manipulation of some sort in one direction. I want you to ask yourself, if you have a draw on liquidity, where do you think you want the manipulation to happen in relation to that draw on liquidity? You want it to happen away from that. So where's my draw? This liquidity void. We're approaching the right time for price to react and distribute. 9:30 open right here. I want to see price manipulate away from my draw on liquidity down here to take out stops that are resting above this important session liquidity right here. So you see how things are starting to add up, right? We have an obvious draw, we have session liquidity, and now we have market and session profiles. Manipulation above to then go lower. And what else does this look like? AMD, accumulation, manipulation, distribution. What have we done overnight? Accumulation. What am I looking for now with the opening range? Manipulation, leading to distribution, down to an obvious draw on liquidity right here. So that's AMD for you. So all of these things are starting to add up, and you can see why people rate setups. This is B plus, A minus, A plus, and everything like that. This is an A plus scenario where everything is starting to line up. Now all I need to do is look for my entry model, right? Before I get into that though, you also want to have low-hanging fruit targets. So we know that the draws on liquidity are lower right here, and we have Asia low and this liquidity void right here. But one thing that I recommend, no matter what, um, no matter how long you've been trading, is having low-hanging fruit targets where you can take some off at, take partials, um, because it's just so much easier on your psychology, right? So if we take a look, where are good areas where we can take some partials at? For me, it's going to be internal highs or internal lows and intermediate term highs and intermediate term lows. So if you want to talk about in terms of importance, session liquidity is the most important. Intermediate term highs or intermediate term lows is second important, and internal highs are the third most important as far as highs and lows go for liquidity. Session liquidity, I already went over. Internal highs and lows. These are going to be highs and lows that are made within fair value gaps. Okay. So if we take a look right here within this big accumulation leg, where did price use fair value gaps to send price higher? Take a look at this one right here. That's a 15-minute fair value gap. Price traded into it to send price higher. You even touched it again right here. To me, this is an intermediate term low right here, and it's important because it was used to send price higher. Are there any more along the way right here? No, no obvious ones, right? What else we have are these internal lows right here. So if they're not trading into a fair value gap, to me, they're internal lows, and that's going to be right here and right here. So which ones I'm going to take partials at, it depends on what my risk to reward is on the trade. Like if I only have a 1-to-1 by the time it hits this one, maybe I'll take off just a little bit. But if I can take off more right here at this 15-minute intermediate term low and get better risk to reward, I'm willing to do that. And then hold runners for my primary draw on liquidity right here. So this is like mapping out everything, right? It takes a little bit of a long time to explain, and I know I wanted to make this quick, but it takes a long time to explain the detail behind everything and how you can formulate the bias and the logic behind a trade right here. Um, Intermediate term lows and highs, they're really important as well because if we think about market maker buy models and market maker sell models, what you're anticipating right here, or what I was anticipating, was a market maker sell model. So I want to see price go lower, obviously. Before price goes lower, it needs to go higher. As it goes higher, it generates all of this liquidity right here. So internal highs, internal lows, and intermediate term lows and session liquidity. So we got all of those built up right there. There's no manipulation that's happening yet. They're all just stacked, and it's like trendline liquidity. And we have this primary draw right here. So now, where can I expect price to actually make that turn within a market maker sell model at these important liquidity points, like this weekly opening price level right here? How do I know price isn't going to just, keep going higher right here? Is because I need to get confirmation down here that we actually are set to go lower. And the three best PD arrays that you can use to determine that you're shifting from a buy model to a sell model, or a sell model to a buy model, so buy model right here, to a sell model to get confirmation that we are going lower, three best PD arrays that I would use is a breaker, an order block, and an inversion fair value gap. Those are the three PD arrays that you can use to determine that there's been a shift in order flow, or what ICT traders refer to as a change in the state of delivery. And the change in the state is just when you're shifting from one model to the next. So I want to see that change in the state happen somewhere up here to get confirmation that we're entering a sell model to go lower. So now that we have all of that premise into going, or as to why I took this trade, now let's talk about what my entry confirmation was. And very simply, I was just looking at this gap right here. So I was using the 5-minute time frame here because it was the highest time frame in my entry model time frames of getting my entry confirmation. So my entry time frames are the 1 minute. You can see them all up right here. 1 minute, 2, 3, 4, 5. These are the 5 that I'm using to actually press the button. I'm looking for the highest time frame, and you can learn this in the 2022 model on ICT's channel. I'm looking for the highest time frame where the most obvious fair value gap is to get disrespected within those 5 time frames, because that's going to give me the most confirmation that there actually is that shift, right? So at this 5-minute being so obvious right here, if I could see price trade higher, it doesn't need to go higher like a lot anymore because we've already taken this uh, primary buy side right here, but we just see an initial move higher and then inverse this right here, then that sets the stage for taking out all of these stacked lows right here. So you can see We got that. I entered, well, I'll just go in with 3 right here. I entered on micros and I'm charting on the mini chart right here, so this is gonna not gonna be accurate. Whoops. But entered off of the close below this 5-minute inversion fair value gap right here. The stop was above this high right here. And my primary draw on liquidity, again, was obviously down here, like I just spent the last 20 minutes talking about. But again, you want to have low hanging fruit targets, right? So that's going to come at these internal lows right here where you can start to take partials at. And so I took off the majority of my position at these lows right here and really the 15-minute intermediate term low, and then left one runner for this area down here. So what ended up happening was really nice move, sharp move lower. And again, think about what I was saying at the beginning of the video. Is that normally what you see on a no news Monday? No. Why can we expect good low resistance liquidity run price action, meaning, cutting through like butter, is because of those things that I mentioned earlier. Okay. And so look at the reaction off of these lows right here. More specifically, the 15-minute intermediate term low. It goes right to it and has huge rejection. So that's why these intermediate term lows and highs are so important, because you're going to see that a lot of the times. You're going to have a really good reaction off of there. And you can use those levels, especially combined with SMT, as a way where you can enter trades, or an area where you can enter trades if it aligns with your bias right here. Obviously, I was short, so I wanted to see price cut through that, but that is where we saw a retracement come into place. So I took off the majority of my position right here, and then set my runner to break even. So like that. My break even got hit for my runner, but that was fine because I took off like 90% of the position right here. But then price ended up actually tanking to my primary draw on liquidity, simply because what we were doing is just going to tap this 15-minute order block. Okay. And we're also trading inside this 15-minute fair value gap right here. But again, think about those things that I mentioned, the 3 things to help you determine, and the 3 best PD arrays to help you find when there's a change in the state of delivery and you're changing from one model to the next, meaning a buy model to a sell model, market maker sell model, a breaker, an order block, and an inversion fair value gap. And you see right here, we have all 3. So that's why I went in with my full allowed risk size that I give myself for my account, because this is just a really great and obvious trade right here. So everything was in alignment. Definitely an A plus trade for me. Um, Really nice take profit area right here, and let my runner go and end up getting break even. But my overall draw on liquidity was spot on. So overall, a really good trading day right here, and a lot of different concepts all coming into one. So this is why it's so important to do as much studying as you can, as much back testing, and just getting experience behind the charts, because I know I went over a ton of things right here. Um, and if you watched it to the end, props to you, because I know a lot of people didn't. But there's so many different concepts. You don't need to know everything. Just stick to one or a few simple things to help you form a bias and an entry model, and that's all you need. I promise you. Okay, so if you watched it all the way through, appreciate you watching, and good luck trading to you, especially in these conditions. Play it safe, de-risk, and yeah, good luck and thanks for watching.